Well, it was a rollercoaster week on Dalal Street, but it ended well in the green. The Nifty and the sensex hit record highs by the end of the week. IT stocks saw a sparkling rally thanks to the earnings print from Infosys and TCS. Can we maintain the winning momentum? We'll find out. This is Editor's Roundtable. I'm Sonia, and with me are Nigel, Rima, Nimesh. Also joining us today is Nilesh, Shah, Managing Director and CEO of Envision Capital. Folks, it's been a really good week for the market. We ended the week at highs, fresh highs for the sensex, for the Nifty rather. The Nifty IT index at a fresh 52-week highs. So no complaints at all after what has been a little bit of a turbulent week.
Yeah.
Well, absolutely. And today the IT earnings weren't great.
Yeah.
It just wasn't very bad. And the index was up over 5%.
Yeah, I think the New Year cheer and the New Year holidays over. We have 4 editors. We have a guest as well with us. So that
a good way to get Nilesh on a day when the index is a 5%, the IT index, and he's been a big IT bull for the last 20 years now. So thanks, Nilesh, for joining in. Your first take on the 3 numbers that you've seen, Infosys, TCS, and Wipro, which came today.
Great, thanks for having me. And yeah, I think there was like what I think Rima rightly said. There's nothing great to look forward to in the numbers, but it was just simply that no bad news is good news. It's probably the worst is over in terms of, especially in terms of the margins. I'm not quite sure how the revenue growth will be. It will still be low single digits, but there's probably some room for margins to expand as attrition comes into control, wage costs come into control. So I think on the whole, directionally should be fine. I think IT should be a sector to kind of really look forward to.
And what about on the market itself overall? Of course, Nigel is going to put some data in front of us, but how are you feeling about the fact that, it's a record high for the markets now? Once again, the momentum has come back in a big way. Do you think it's only northwards from here?
I think it looks fine for now. Momentum is good, liquidity is good. So far, earnings support has been pretty good. We have really no bad news to look forward to. There are the times ahead look a period of stability. So I think it all looks fine so far. So far, so good.
Well, let's do a quick recap then, Nilesh, before we go ahead of what transpired this week itself. So for the week itself, the global markets are still a little bit jittery because the street is divided on what's going to come out of the Fed. The US data still looks very, very good, and that's a bit of a pain point, right? Very good news could be a little bit of bad news because then we don't know the quantum, we don't know when the Fed goes ahead and cuts as well. Tech results, though, they were good, a good way to end the week because those results, they surprised positively, and that's why, in fact, they held one end up. But the Nifty Bank still was down close to 0.8% for the week itself, and the Nifty Bank was struggling most of the week. Reliance Industries, though, did well, so that made up for what the Nifty Bank couldn't do in the past week. We're talking about large cap IT, and Rima will talk about it in greater detail, but large cap could be a play more on the global focus, how things, a macro call. But if large cap is going to be stable, maybe mid cap, just maybe mid caps will do better. In fact, we had a couple of names from the mid cap space that were up 10-12% for this week itself. You had Birlasoft, Coforge as well was higher. You had an upgraded as well that came in there, but that was one stock. And this week you learned one lesson about some kind of diversifications, because Polycab, the big outperformer in the last 2 years or so, well, that one gave up close to 25% of its market capitalization. So some diversification is something that the street came to terms with. And Bandhan Bank as well, some rumors, but the street is taking note of these rumors as well. So the management came out and clarified that no, things are fine, but still the stock was down close to around 10%, or in a couple of other big losers, Z as well as Metropolis. So the sense you got is, yes, the headline index looked good, but there were plenty of stocks that were down at least 5, 8, 10% as well. What do we look forward to? Earnings. Earnings will be important both from India as well as from the global markets. You have the big US banks as well that will deliver over the weekend, so that's going to be an important focus. US economic data is going to be important. Any kind of announcements with regards to the budget as well is what we'll be waiting by fun. Guys, we're celebrating, right? This week was a good week. Next week, get ready. You have 6 days to work. You have Saturday as well working. I think Sonia's got surprise on that.
What you surprised when you got to know?
I was on leave and I was like, man, is this really happening? So yeah, 6 days next week. NSE will be testing their backup site as well.
Yeah.
So look forward to a long
When's the next long weekend? Tell us that.
So we have 6 and then we go for 4.
Then we go for 4 straight away. All right, but we had a big, a trigger this week, which was the earnings season. It kick-started with results from TCS, Infosys, surprised the street with no bad news, right? No negative surprises. I think that was the big takeaway. But Rima, give us the key highlights.
Well, just a quick, wrap out of the IT earnings that we've had today. Well, the Nifty IT index ended with a gain of over 5%, 5.3%. The biggest gainer was Infi, up 8%. TCS and Wipro too did very well. Now, on the top line, the performance was better than what the street was expecting. Now, Q3 was expected to be a muted quarter because of furloughs, the overall weak macro environment, discretionary spending being cut. Therefore, estimates were on the lower side. But the companies have managed to beat these muted estimates. TCS, in fact, has clocked in a growth. For Infi, the revenue decline is just 1%, while for Wipro, there is a revenue decline and revenues have fallen for the fourth quarter in a row. But the revenue fall of 1.7% is less than what the street was anticipating. So that's on the revenue front. Margin performance too has been a beat, and for all three companies. TCS's margins have expanded for the second consecutive quarter. Infi has gone ahead and maintained its margin guidance for the full year, and Wipro too, despite a negative impact of the wage hike, they've managed to maintain margins on a quarter-on-quarter basis at 16% versus expectations of a bit of a fall. And the good news is, as Nilesh was pointing out, there is a possibility of margin expansion continuing. So IIFL, for instance, is expecting that for Infi, margins will continue to expand in FY25 and FY26 by 50 basis points each. Because now that the supply side situation is easing with attrition coming in at very low levels, at decade low levels, there is scope for margin expansion. But apart from the EPS impact due to the margin performance, I think what the street is really latching on to is the hope that demand has bottomed out and growth will pick up, particularly for the BFS vertical. BFS stands for Banking Financial Services. 30% of the tech industry, they got hit the hardest, and TCS's management, both Kriti and NGS, said that growth will recover in Q4 compared to Q3. So, I think the street is latching on to that hope that BFS has bottomed out, and that could be a big trigger for the entire industry.
Yeah.
Okay, but you're also going to tell us how the global economy has affected the Indian IT sector, right? And some instances of how the past compares to what you're seeing in the performance now.
Absolutely. So this is an interesting analysis that I've picked up from Nuvama, where they're talking about the current Jan 24 period and how it's the mirror image, the exact opposite of what took place in Jan 2022. Now, why is Jan 22 a significant, benchmark to look against? That's because that was the start of the IT stocks decline. So let's tell you how the two compare. In Jan 2022, we had interest rates at an all-time low. Currently, we have interest rates at an all-time high. Secondly, in Jan 2022, the expectation was that hike will be coming in the next few months. Now we're looking at hikes, a cut in interest rate hikes. The first hike took place in March of 2022, and the first rate cut by the Federal Reserve is expected in March of 2024. Also, the expectation back then in Jan of 2022 is that the weak macro will start hurting growth for the Indian IT companies. And now we're saying that the macro maybe is recovering, US is not going into a recession, and therefore we will see a pickup in growth. So the macro situation today is the exact opposite of what happened exactly 2 years back. Now, what happened 2 years back in terms of the stock price performance? First, the stocks fell, and the EPS cuts was not very significant, and the EPS downgrades which happened at a later period. So the stocks fell by 35 to 45% over a period of Jan to June of 2022, while the EPS cuts were very moderate. So what the Nuvama is perhaps implying in a way is that even if we get moderate EPS growth upgrades, because the downgrades back then were not significant, 3 to 5%, but yet the stocks fell 35 to 45%. So there is a possibility that we could see some upgrades, and this will take place at a later period with a lag in FY26. But the question is, what happens to the stocks? If the entire situation is a mirror image of what happened, can the IT stocks see a big recovery? Nilesh, weigh in on that. 2023 was a decent year for the IT companies, but that followed a very weak year of 2022 when IT stocks, came under severe pressure. Do you think there is a case for a big stock rally, even though the EPS upgrades may not be very significant?
So what it looks like that in the larger IT companies, the margin expansion can surely surprise on the upside. That's going to be the big driver. That's something which will drive earnings. And over the last year or so, the earnings growth has not been significant. So it's quite possible over the next few quarters, maybe the rest of 24, we will see earnings surprise, which could drive some bit of re-rating or a P expansion. And you could call that as some kind of a mean reversion happening with the large cap IT space.
So, Nilesh, what kind of weight you'll give to the IT index or the IT stocks? Say for 2024, you're going to choose between large cap IT or IT as an index, large caps and mid caps? What would be your proportion in terms of each?
So Nimish, just as a pure bottom-up investor with a slightly more medium-term perspective, I clearly believe the mid-cap, small-cap IT space honestly is a paradise. Okay, that's really the space to be in. If you're not really worried about how you're going to do in the short term, or you're not benchmarking yourself, you don't have any index to outperform, I still think the big opportunity is in mid and small caps. And what you're going to see, Nimish, over the next few quarters is some of these companies really coming out and kind of claiming capabilities on the artificial intelligence side. And anybody who gets that right, the swing can be massive. The large caps, of course, will have their own role to play in adopting generative AI, but it won't mean much for them. It's not going to make some kind of 10, 20, 30% of the revenue contribution. But for a mid or a small cap company, that can be very meaningful, which can trigger significant re-rating. So I would still think that's the space to watch out. But for short-term momentum, guys, right now, momentum is clearly in favor of large caps.
Okay, momentum is in clear favor of large caps, you're saying. And speaking of earnings, Nilesh has actually put together some interesting data for us. Nilesh, take it away.
Well, we are going to start a very busy season. We just saw what happened to IT today, right? The index was a 5% on not so great numbers. So let me just go to the wall and explain what to expect in Q3 in terms of the earnings season. Now, again, in Q3, the domestic sector is going to drive the earnings. So that's the 20% growth is going to come only from the domestic sector. So that's the big sector to watch out as far as earnings are concerned. Now, expect a 7% revenue growth, expect a 9% EBITDA growth, and a 11% PAT growth in Q3 across the Nifty universe. So that's the broad earnings picture as far as the earnings are concerned. But what to expect? The margins are going to expand for the fourth straight quarter, and even in this quarter, expect 165 basis point YOY margin expansion. So the numbers on margins will look very good for most of the companies. So that's a broad picture. Now look at, I've just drilled down to the individual sectors as well. I've left IT to Rima. I'll start with banking. For banks, expect a loan growth of 15 to 16% YOY and a 4% quarter-on-quarter. But for banks, expect a quarter-on-quarter some bit of moderation in terms of NIM as well. So 8 to 10 basis point is what the street is anticipating in terms of moderation for the banks in terms of NIM. The second is going to be NBFC. NBFC is going to see a very strong quarter according to most of the analysts. The growth momentum is likely to sustain, and CLSA believes that within the NBFC, the no-brainer pick is Bajaj Finance. So that's a big pick according to the CLSA. Look at autos now. For autos, the margin expansion is going to continue on back of lower costs, but the two-wheelers are expected to outperform both four-wheelers as well as the CVs in this quarter as well. So that's the overall auto as far as earnings are concerned. The next sector to watch is chemicals. It's going to be a weak quarter, but it looks like that weakness is in the price. So it's not about the earnings for chemicals. It's the outlook for the second half that's going to be very crucial as far as the chemical sector stocks are concerned. The next is cement. Going to be a very mute kind of a growth, 5% volume growth for cement, and EBITDA per ton could improve between 1100 to 1150 rupees per ton. So that's for the cement sector. The next is oil and gas. This is going to be quite interesting. We've seen a big rally in the OMC stocks, but expect a weak quarter from most of the OMCs on the back of the inventory loss. But it's the city gas companies which are going to report very strong margins. So that's going to be something watch out for MGL, IGL and all. The next is agrochem. Again, the channel inventory is still very high and the demand is still very weak. So expect some bit of softness for the agrochem even in this quarter. Real estate, there is nothing to guess because there has been a record sales in Q3, the pre-booking sales, so to speak. So the numbers are looking good, very good. FMCG, it's going to be the same as what it was last quarter, a very tepid growth and a modest single-digit growth quarter-on-quarter for most of the FMCG names. So no big surprise of fireworks there. Then look at the mid-cap IT. I've left the large-cap IT. The mid-cap IT is expected to outperform the large-cap IT. So imagine what can happen to the mid-cap IT names if they outperform the likes of large caps and all. In terms of metals, again, it's going to be a very soft, very muted quarter for most of the metal names. Pharma, again, it's going to be a very mixed quarter for the pharma stocks. So individual names can be a big difference there. And for telecom, again, no tariff hike expected, so it's going to be a muted quarter for the telecom sector as well. But this is the next interesting part. I've just looked at the Citi's report and what are the key positive surprises in the results. According to Citi Note, these are the stocks which can surprise positively. L&T is the first name. The order inflows are going to be quite strong, and execution is also going to be equally strong. Adani Ports, they've already announced that they're going to raise the guidance, so expect a healthy volumes growth for Adani Ports. GCPL, that's going to be an interesting stock in the FMCG basket. Overall, it's going to be subdued, but GCPL can surprise on the positive side as far as Q3 is concerned. Within banks, Axis Bank is expected, according to the Citi Note, to have a better quarter, both in terms of NIM trajectory as well as in terms of other issues as well. And the last is Hero MotoCorp. That's going to expect a better margin and an operational leverage as well. So Hero MotoCorp would surprise on the positive side. But now look at the negatives as well. Citi has put out 5 stocks which can negatively surprise as well in this earning. The first name is Bata. Weak exports as well as apparel, so Bata could surprise negatively. Lupin can see some bit of competition in individual sales or individual products, so that can have an impact. Tata Steel, the European can drag Tata Steel's numbers this quarter as well. AU Small Finance Bank within the private names can surprise on NIM as well as ROAs, which can drag, so that could be a negative surprise. And the last is Maruti. That can see a lower margins on higher discounts. So these are a few names which can surprise negatively. So quarter 3 looks good. The big would be the big margin expansion, which can continue for the 4th straight quarter, and that's going to be up 60 basis points YOY.
Okay, Nimesh, thanks for that. Nilesh, any takeaways? What would your preferred sectors be in this particular quarter?
So I still think the biggest momentum is going to be on the companies which are exposed to the capital markets. And yesterday it's a company we own, HDFC AMC.
Yeah.
They came out with stellar numbers, 20% revenue growth, 30% PAT growth, which I think is quite significant. And I see a lot of the brokerages, the depositories, the exchanges. My view is that that's going to be a standout sector, though of course stock prices have gone up significantly. But if I were to just look at just pure earnings, that's one sector which probably will have the best growth rates, at least in the quarter gone by.
All right, let's do one thing. Let's take a short commercial break. On the other side, we'll discuss more themes and stocks with Nilesh, and we'll come back with lots more. Stay tuned. Welcome back to Editor's Roundtable. We were discussing with Nilesh Shah of Envision Capital about all the big stocks that moved around last week and also the big themes to come. Nilesh, this tourism space is picking up in a big way, right? And next week you have the opening of the Ram Mandir in Ayodhya. So plenty of these religious tourism stocks have risen quite a bit. But it's also a slightly tricky space because you don't know which ones are just a fad and which ones are for long-term investors. What are your thoughts here?
No, it's a great opportunity. Clearly, domestic tourism is going to grow and grow quite meaningfully. In fact, I actually think that I wouldn't be surprised if domestic tourism grows at a much faster pace versus international travel or international tourism. And clearly, obviously, it's going to be the airlines, the online travel aggregators. These will be the big beneficiaries of that. I don't think there's any dedicated religious tourism play, but it's clearly going to be the travel services companies, the travel aggregators, which will be disproportionate beneficiaries of this trend. And I think it's going to be quite meaningful.
Okay, Nilesh, right next to you on your left is the CNBC-TV18 budget ballot box. I know it's going to be a vote and account this time, but it's just 15 days away, a little more than that. So we would love it if you would write down your budget wish list and also tell our viewers, what is it that you can realistically expect this time?
Yep, so I think it's already been kind of, the finance minister said that, don't expect any big bang announcements. But clearly as an investor, I'd always want that. I don't think that tinkering with the LTCG should happen. I still think India needs a differential tax rates on long-term capital gains.
Dividend tax?
Sorry?
What about dividend tax?
Dividend tax, if that can be, because that's double taxation.
That's double taxation.
So obviously...
And it's hurting a lot of investors.
That's right. I mean, and if you actually add up, then the effective tax rate goes really
much higher.
Much higher. And we've seen also several kind of people move out of the country, and there are reports that one of the reasons could be because of high tax rates on dividends. So I think if that gets plugged, I think that will be quite meaningful.
So you want to write it down on that paper and just slip it in there into the box? Hoping that the finance minister hears or reads what you want out of the budget. Because this time it's a vote on account, but at least in July you'll have the full-blown budget post the election. So.
And nothing wrong in hoping, right?
Yeah, of course.
And expecting.
We hope.
But hope is a
every
data
year.
point. All right. Well, that's Nilesh putting in his budget wish list, and there are plenty of ballot boxes across the city as well. There are plenty in our office too. So all of you watching can, free to come, put in your budget wish list as well, hoping that the finance minister will listen to your wishes and your wishes may come true. But at the end of the day, I think the market's wishes came true, right? This week, record high. So we're going in, I'm sure everyone, all the bulls are going to have a great weekend.
Oh, absolutely. They're going to cheer it, right? I mean, all-time highs. Finally, even Reliance is supporting the market, IT index is supporting the market. So it's all around large cap. finally taking the markets. Nifty
What
at
plans for the
all-time high.
weekend, Nilesh? Enough of markets.
Enough of markets now. This weekend I'll just chill out. No, in fact, this weekend is good for me. No, I'm going to celebrate Sankrant. So Saturday and Sunday, both the days.
Oh,
Kite
lovely.
flying is a
Kite
big
flying,
Oh,
yeah.
yes, kite flying, correct. What
it's a
about
big
you,
event.
Nilesh?
So I think it's just going to be party time. I think we'll extend the week,
Eat
the
undio and
full
have
week party into the
kite
weekend.
flying,
That's
yeah.
it.
Yeah, we were lucky. Nimesh got us our share of undio, so yummy.
All right. Well, all you guys have a great weekend. Thanks a lot for watching and see you again bright and early on Monday morning.